Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May the 8th, Monday, starting the week without any big economic data for today, but at least we had something. Consumer inflation expectations 4.4. We were expecting a little bit higher, but the previous one is coming from the highs, 4.7, and looks like the inflation expectations, at least for the next 12 months, it's ticking lower, 4.4%, down half a percentage point for March. So the expectations for inflation is still going lower, but household spending slumped in April. Looks like money and credit tightening, it's having a big impact on households and how the people spend their money, and it's a matter of time that consumer spending is going to feel really pain. So even though the expectations for inflation is still going lower, consumer spending might impact the fears of recession, and we'll have to see if we start seeing signs of really weakening of the economy. But apart from that, it's just a very technical day. A bunch of Feds were talking. Goolsbee said quite different interesting sentences and remarks. For example, he's getting the vibes that a credit squeeze is beginning. So be careful with this. Credit tightening might impact even more that the interest rates that Fed are rising, because credit squeeze affect everyone the same as the interest rates from the Fed. So if a credit squeeze is starting to put pressure on everyone, businesses, households, I mean, this may be like a virtual 6% interest rates from the Fed. So be careful because I think there's more and more pressure on the economy being put without any signs of weakening, but at some point something will break. More from Goolsbee. You have to say that a recession is a possibility. Producer prices have moved into a deflationary environment, and it is premature to judge the rate decision for the June FOMC meeting. We have to weigh how much Fed work is being done by tighter credit. So again, in the same lines, inflation looks like it's going lower. Producer prices has come to a deflationary environment, but credit tightening will increase the impact that interest rates at 5.25% right now are putting from the Fed. That, along with some credit tightening, will have a huge impact, and we are starting to see that. Let's see how that ends up, because we have to be really careful. Let's talk about Nasdaq now. So we opened quite choppy, let's recap on the daily. We are on top of the range. We have the volume since this 13th of March higher low. We have been putting nice moves to the upside, but we've been like 4 to 5 weeks in a range, and we are on top of the range with right now a doji on the daily. This is putting pressure, and this candle on Friday showed 15,000 open interest on Nasdaq futures. That's an insane amount of open interest for a single day. So I'm looking for longs. I was looking for longs. Right now, I'm not looking anymore, but look at these kind of things that I really like to trade. So let me show you. This was the previous pivot. This was the breakdown, and look at these two bottoming tails. This bear trap liquidity grab started the move higher. We broke this consolidation. We consolidated at VWAP and right below pre-market low. We then bounce off Look at this beautiful point of control bounce, and we are still grinding higher. Now, this looks quite weak. And this is due to the fact that we have Apple barely in the green, 0.05, and we have Microsoft really feeling pressure. Why is Microsoft down -1%? The reason is due to AMD. AMD is 4.33% on the day. And this is an AI play. AMD versus Microsoft on the AI fight, AI war. And looks like between those two stocks, AMD is winning the war of AI. The same that Nvidia is also pushing higher. Microsoft is feeling the pressure. So let's see what happens. But I think one of the reasons why the Nasdaq is not doing better is due to Microsoft being a bag today. Basically, it's Microsoft is the only one deep in the red today for the tech stocks. Amazon is 24%, but looking to, I think, at least to consolidate and to maybe finish in the green. Google is also pushing higher, but Microsoft is really the reason why I didn't take bigger positions and more confident positions to the downside. But still, the daily looks good for a break of 13,320. That's the big level that we have up here. And the 30-minute chart is showing consolidation, liquidity trap into Friday's consolidation. Look at this 30-minute consolidation. Previous resistance is now more or less support with this nice bottoming tail. This was a big rejection, but look at this engulfing, bullish engulfing candle on the 30-minute chart, and it looks like they are pushing. We are right at settlement, so this is not a place in which I want to trade. So we'll just wait for maybe some hires, some higher highs and things like that, some clear price action. And until Microsoft shows signs of at least breaking these two pivots that we have here, I mean, there's no way I'm going long again. I have some scalps, I'm green today, but barely. I think it's 140 on the day. Okay, I'm just waiting because I don't feel confident with this price action. So let's see. Apple going for break of high of day. Some other things interesting. Copper, as always, you have to have this chart always up. Every day you have to analyze copper. Copper is the heartbeat of the economy right now. We are still holding this 3.8 level area zone, and we put a rejection candle here on Monday last week at 4. I am not confident. This is a nice structure, double bottom, triple bottom, even at 3.8, 3.84. And I would like for this pivot to be broken and maybe continuation for this trendline breakout. At the same time, I need gold to look at the weekly again. I was telling that in my videos and into my Discord. Because look at this, it was this rejection. These are weekly. These are nasty. These are nasty. The end of the week, last week, we got rejected again. So I would like gold to fly a little bit more, copper to break this pivot, and maybe some risk on from Bitcoin and small caps that I'm really watching. I want the market to feel confident, to feel risk on mode. And a lot of markets are consolidating. Bitcoin is consolidating. Nasdaq is trying to break the range. S&P is also putting nice candles, but it's just in the middle of the big range. Copper is just trying to find a bottom. Gold after rejection is trying to hold 2000. There's a lot of markets just waiting. This Wednesday we have CPI, but just waiting. The banks are bouncing, but not as we would like to see. Back West was, I think it was 40% today up or something like that. Look at this. And then it got rejected. So there's still a lot of fear on the regional banking sector. And the fact that Microsoft is not all well, starting to look nice. But I need Microsoft to really start putting new highs and feeling and looking bullish. That in conjunction with Apple, I think we might see some moves to the upside, but until then, it's just a really boring, choppy day. I think that's all from my side. There's nothing else I'm seeing today. So we will just have to wait for better opportunities tomorrow. That's my honest recommendation. So thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. We are starting lunch hour, noon to 1 p.m. Into the afternoon, we might see some better move if we start putting new lows or we break down this pivot. I will not be interested in trading it. There is a lot of uncertainty in these markets, a lot of Fed talks talking about credit tightening, credit squeeze, economy slowdown. So, I mean, I'm not really confident today. I feel that something is really sick underground. So, I'm just managing my risk and just sitting tight for now. Thank you, everyone. And remember that discipline and risk management are key for success. Stay safe, everyone, and see you tomorrow.